Good afternoon, everyone. Today is the 30th of November, 2017, and what a week it's been. This is Trader Tim from eMiniMind.com. I wanted to run through the trade setups from today, do a little bit of recap on this week, and boy, what a week it's been. Between the Bitcoin surge above 10,000 and today's morning trend and Tuesday's monster up day. This is probably one of the best weeks I've had in the markets, and I know a lot of traders were in the room Tuesday and caught the 13 pointer that we you know just got to watch play out in front of us and jump in with very low risk and rode that thing into the day, into the profit territory. So for those that have been trading real money, it's been a great week. So let's talk about today. Actually, first of all, let's talk about Bitcoin. So Bitcoin made a run up above 10,000 the other night, and then it climbed to about 11,000, sold off below 9,000. Now it's right back up about 10,000. I sold a portion of my Bitcoin around 10,000, a little over 10,000 and change, and so I converted that from Bitcoin into US dollars and then deposited that into my checking account that I have linked to my Bitcoin wallet. So that's how that works. I also have a Bitcoin debit card that I could convert Bitcoin into US dollars, put it on that card, and spend. But selling a little bit when the market has made such a big run is kind of a no-brainer. I was fortunate enough to buy down at 200, which I felt like I was kind of late to the party at that point, but obviously that not being the case. So sold a little bit, still have some more Bitcoin also, and just going to kind of sit on it and see what happens. If you're interested in learning about Bitcoin or want to buy it yourself, just go to the homepage, scroll down about halfway down. I've got a good introductory post to Bitcoin, pretty much everything you need to know on what it is, how to buy it, what you can do with it. So you can check that out. It's I think I titled it the Bitcoin Ultimate Guide. So now let's jump into today and this week in the markets. If we start on the left side of the chart here, the daily chart, this trend line here now looks pretty shallow relative to the rally that we've had this week. It used to look pretty steep, and now with the market going even straighter up, we have a lot of room now to come back to the trend line. So if we go from swing low to swing high, that traditional retracement is a 2607. If we draw from highs to highs, that gives us an extension that's probably more likely to be the pullback point, 2626s. From here, if we kind of drift sideways towards this trend line, eventually what happens is enough time goes by, and then we end up touching the trend line, and we'll see if the touch can continue on higher or if we roll over. There's the tax bill being discussed right now, and if some sort of voting or passing of a tax plan occurs, that could have an impact on the market. So, boy, there's a lot going on to try and interpret and sort of get a grasp on where the market might go. But from an intraday perspective, I wanted to walk through today's trades, and I'll enlarge my tick chart. Actually, before I do that, so the first trade today, we had the gap up. You can see, well, it's a little too close. You can see the gap up this morning, and we had a little 5-minute fake out. So the long above the first 5-minute high really only had momentum for a few minutes, then we rolled over. But then it was at that point that the market just started giving us setup after setup. So the first 5 minute was a loser on the day. When we gap up like that, I like to try to take advantage of a potential run off the open. And last week we caught a good one, and this one today not really doing anything. So I use the same 6 tick stop on the ES, so it's still you know not much of a significant loss at all. But then after about 15 minutes of trade, I'll come over to my 512 tick chart here. And now what I'm doing is looking to identify the swing lows and the swing highs. After 15 minutes, we've got some market data to pull from. And so now we can use this data to identify setup. So the first setup here, here's the vertical line here is 15 minutes into the day. And the first thing we did was we broke this little one candle swing low. So then I drew from highs to lows. That gave us a nice short setup, and then was able to ride that down to basically the low of the day before we started to reverse. Once we reversed, could easily just now we have a clear low on the day. We can draw from lows to highs. Had a nice little pullback for a run to the upside. That ran for a couple of points. Then the next setup, we broke this swing low. So I drew from highs to lows. That gave us another short setup down to the target and then some. Then we got this little double bottom here. We broke the swing high, meaning price on the right here broke this previous swing high. So I drew from lows to highs. Market pulled back, touched the 50. I'm always placing my orders just a smidge in front of the 50 so that if it touches exactly, you get filled. And this was the first kind of big run up of the morning. And just by trailing your stop below these swing lows, you can stay in the trade for a good chunk of the move, getting out up here. There's a couple ways to trail. If you're trailing swing lows and then you come to a double top situation like this up here, you can bring your stop up and be more aggressive. So if you have multiple contracts, you can take one off at the negative 23, trail swings. Then if you get into this situation where you get a double top, you could, let's say you have 3 contracts, one at the negative 23, trail swings. When you get the double top, you could take one off, put your stop underneath the double top swing low, then leave the other one a little bit more conservative if you wanted to. But it's totally up to you. Then from there, we started to sell off a little bit more. And so just by drawing up the short, we never had a short trade. We had the long trade first. So if I zoom out a little bit more, so we started to sell off. So immediately when we start to have a bigger sell off, I like to draw the full halfway back, or from a bigger anchor point back here. So this was a more significant low just by the amount of data that we have. We've got some major lows and major highs. Then we have smaller swing highs and swing lows in the mix. So if we start to pull back on a bigger scale, I like to draw the full halfway back. And when we have a bigger halfway back like this, I don't like to just take the blind limit at the 50. I like to wait for that to touch, which it came a tick or two away here. And then we started to break swing highs. And so when we did, over here, I was able to draw from lows to highs, let the market pull back, and then boom, we were off to the races. And so a trade like this, you can do a couple ways. You can use the negative 23 target as your first target for the trade, but you can use the full halfway back negative 23, not just this tiny one that we're using for entry. And then just a matter of trailing your stop underneath each of these lows. Trail, 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 all the way up to a 56. And so, you know, 42 and change, we'll round up, we'll call it a 43, up to a 56. I mean, that's two monster moves this week that we were able to catch, that I caught. We caught the 13 pointer on Tuesday live in the trading room. Caught the big guy here. Another one back just before that, a couple smaller ones throughout the morning. So, when I get the question, hey, I want to make 500 bucks a day, or I want to make $200 a day every single day. Well, that's not as realistic in terms of on the bad days. If you have this goal set in mind, you end up having to force yourself to find a trade, to make a trade, just to make your quota. And then on the good days, you might make that quota in the first trade and then stop. So that's why I've always followed the approach of continuing to trade on the good days when times are good, and on bad days when things are choppy and there's not much going on, it's okay to shut down early. So yeah, what a week. What a week it's been. And like I said, this was one of the biggest weeks I've ever had here in the markets, and between Bitcoin, between the ES, between everything that's going on. It was a pretty fantastic week. So I know a lot of you we had a good amount in the room on Tuesday, so people are, making gains. And if you're interested in, my specific trading rules that I'm using here, you can check those out over at the blog, emonymine.com/trading rules. And if some of the stuff seems like, well, how can the market pull back to the 50% and it reverses right at the tick? I mean, just go back and look at or read books by Gann and some of these very, very early adopters who have kind of discovered this very simple method for trading the markets. And then when you pair that with a trail stop approach, to be trailing swings and letting the market tell you when to get out instead of just capping your gains. Man, I mean, think about how many 6-tick losses you would have to to offset a 13.1 winning trade of 13 points from Tuesday, and today, another 10 plus winner. And so, when you start looking at the numbers like that, it can be really helpful to your confidence, and then, also to just kind of get in that rhythm. And then when you get in the rhythm, boy, things really start to build quickly. So next week, I'd be looking for us to drift, more towards this trend line. And in the meantime, uh, I expect a lot more good trading. Even if we sell off here, the market is trading well. And so I hope everyone has a great rest of the week. Have a great weekend, and we'll talk to you next week.